All right. What is up, tycoons? What's up, traders? Super excited for today's video. We're going to talk about max pain for the bulls. Okay. That's what today felt like for a lot of the bulls. We saw a big drop in the market that was very unexpected due to some news in Canada, most likely was the news. Now, we're going to talk about a lot in today's video and give you guys a nice breakdown of TLT. We're going to give a detailed technical analysis. That's going to be in the later half of the video. So, feel free, you won't hurt my feelings if you want to skip and fast forward towards the end of the video to get into the TLT analysis. As always, I've got some really good charts and data and information I want to present with you guys before we hop right into the technicals. Please smash that like button and subscribe to the channel if you guys are new. Now, it's not a surprise that we saw a pullback in the stock market today. If you take a look, the fear and greed index was extremely high yesterday at 74, almost peaking out and hitting extreme greed. This has probably cooled off a little bit, but I was mentioning in the Discord and, talking to a few people, wow, I can't remember the last time I saw the fear and greed index all the way up this high and showing this much greed in the market. Now, there have been 14 Fed hiking cycles and 11 have landed in recession. So historically, the odds are not in our favor that we're going to get a soft landing. Now, that's been the big thesis right now. And, there is data suggesting we could actually be heading towards a soft landing. It really all just depends. Okay. No one can predict the future. And if you use the past, Albert Einstein has a really great saying, a really great quote. If you want to know what's going to happen in the future, look in the past. And if you look in the past, 11 out of the 14 past Fed hiking cycles have landed us in a recession. Now, as always, the content provided on this channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. So make sure to read through the full disclaimer. We'll go ahead and hop forward in the video. One thing that I do want to show you guys is during a pre-election year, okay, that's what we're going to pay attention to in this is we typically see really good gains. Okay, now this is here recently, okay, in the past 21 years. All right, all of the dotted lines right here, these are going to be pre-election years. Okay, speaking of the month in June, and when we look at June market performance in these pre-election years, and these are all trading days in June. Okay, so 21 trading days, and you see that it is historically bullish, right? So it will be very interesting to see, does this recent data prove to still be true and still be valid, and will we see the bull market continue in June, or could we potentially see a correction, right? If you look at all of the years that aren't pre-election years, okay, June historically isn't a great month for the market, which is where that famous saying "sell in May goes and go away" comes from, right? Typically, June and July, may not always be the best returns for the stock market. But if you look at here, the Dow Jones Industrial Average, the S&P 500, the NASDAQ, Russell 1000, and Russell 2000, they all perform well in pre-election years during if we take a look, the month of June. So definitely want to keep that in mind. That's some really interesting data and some pretty good data that, a lot of people may be wondering, why is the market going up? There's a lot of election data, right? Initially, back in October, November, I was putting out videos and showing you guys, hey, historically, during midterm elections, okay, the stock market is green 6 months to a year out. Now, that was all the way back in October, November. And obviously, we can see that the stock market has actually rallied and we ended up putting in bottoms, in that October timeframe. So a lot of this data is really important and a lot of people aren't sharing this data, or a lot of people don't know about this data. So we'll go ahead and move forward a little bit. And what we're going to talk about next is going to be the business cycles. Okay. And so what we see here, all right, is you see stocks and commodities will tend to go down in stage one, and you see bonds start to go up in stage one. All right, stage 6, which I believe we are out of now, okay, is where you see bonds, stocks, and commodities going down. And then stage 1, you start to see stocks and commodities go down. You start to see bonds go up. Stage 2 here is when you're seeing commodities going down, okay, and you're seeing stocks and bonds start to go up. Now, the reason I'm showing you guys this is because it's very hard to tell, but to me, it appears we could be in either stage 1 or stage 2. I'm going to show you a very interesting chart. Okay, so what we have here is the commodity index right here in white. We have the stock market here in blue, and then we have the bond market ETF here in yellow. All right, and we can see that the stock market and the bond market appear to be putting in a bottom, right? Putting in that rounded bottom here, trying to find a bottom, while we're seeing commodities dropping. And if we go back over here to this chart, again, you're going to see stocks and bonds start to drop here, or start to bottom and put in this rounded bottom here, while you see commodities going down. So if this is true, right, and if we are actually in this cycle right now, it's going to be really, really interesting to see, because what that could lead to is we could potentially see stocks and bonds continue to rally from here. Okay, and continue to head up higher, and potentially we may have already put in, or if not putting in, that bottom in the stock market based on the business cycle. So really good data right here. I've went over this chart before, and I've kind of showed you guys this chart here before as well. All right, back in late October, November, I was saying that it looks like we're somewhere in this phase right here, and now it potentially seems we have progressed from stage 1 to stage 2. That still will be determined. Okay, we could actually end up seeing the stock market crash back down and still be in stage 1. But that's definitely something that I'm looking at right now. The stock market has been driven mostly by the FANG. When you look at the gangs, all right, the FANG Plus Index. Now, the FANG used to just be Facebook, Amazon, Netflix, Google, right? It's a lot more than that now. Okay, you have Meta in there, which is Facebook, right? Formerly Facebook. You have Apple, Amazon, Netflix, Microsoft. AMD is also in there, as well as Snowflake, Nvidia, Tesla, and Google. Okay, and if we take a look, the FANG, all right, is very close to its all-time highs, which is really, really amazing. And you have a lot of people putting out lots of fear, lots of FUD, uncertainty, and doubt into the market. And meanwhile, the market is, the NASDAQ is very close to all-time highs. The FANG is very close to all-time highs. We just saw Apple hit all-time highs. We just saw Nvidia hit all-time highs. So it's really, really amazing. Okay. Now this does have a lot of people worried. Okay. And for good reasons. Okay. So what we have here are the FANGs. All right. And the tech titans, basically the top tech companies: Meta, Amazon, Netflix, Microsoft, Apple, Google, Adobe. We have Salesforce and Nvidia in here. And essentially what, what certain people are cautious of right now is going to be this part of the chart right here. Okay. And the reason being is because this is your market cap weight minus the earnings weight. And so you have the earnings as a percentage of the S&P 500, and then you have the market cap as a percentage of the S&P 500. And you can see this is back up here to these previous peaks, right? And what we're actually seeing is that the market cap weight minus the earnings weight is actually at historic highs, right? And we really haven't seen highs this, we haven't seen levels this high when you look at the market cap weight minus the earnings weight. So this is essentially saying, like, what is the market cap to the S&P 500 relevant to the earnings weight in the S&P 500? Right. And so what's going on right now is we have this AI boom, we have this AI bubble forming. And so tech specifically is, they don't know how to value essentially AI, right? And they don't know the true value that AI is going to bring in the future, whether it's going to be massive value or whether maybe we're overpricing that value right now. It has a lot of people confused and worried, and investors are rushing into lots of tech and anything related with AI, because of the fact that they don't know, properly how to value AI. And so that's why we're seeing such a discrepancy here when the market cap weight minus the earnings weight at such, high levels, right? You look at Nvidia's PE ratio, their price to sales ratio, it's astronomical, right? And a lot of these companies have really, really high PE ratios. That doesn't mean that they can't, meet those expectations or beat those expectations. But things are really frothy right now in the market. And it's causing a lot of people to have caution or say that a massive crash is coming. Right. If you take a look over here, again, this is kind of just visualizing the same thing. Look at the FANG index PE ratio, right? And then you look at this right here. Again, it's just suggesting that it's very, very frothy right now. We can see when we put in these peaks over here and over here, right? And here we are right now. We ended up seeing significant drops each time that we were over here at the POP rate on a year-over-year basis for the FANG. And here we are right now, much higher than those levels. And, there is that potential that we could be putting in a peak. Now, look what happened over here. the market still continued to go higher, right? And ultimately went much higher over here. But again, we have seen these peaks before where we end up seeing the market start to drop and pull back. So is that the question, right? And that's the big question right now. Okay, are we about to see a big pullback to reevaluate and give back some of these gains to get some certain stocks at a proper valuations, perhaps even get a rotation out of some of this big tech into some of the other sectors, right? And the reason I say that is if you take a look at the SPY RSP 60-day return, which the RSP is going to be your equal weight stock market index. And rather than tech is very heavily weighted in the market cap versus the equal weight, and you can see that it's massively outperforming the rest of the market. Okay, and lots of people are saying that this is a huge sign that there's a correction to come and that we're about to see this big crash. The thing is that this is not untypical. Okay, now when you look at kind of like the 60-day return chart, yeah, we are at a peaking point here, but it's very common for the top stocks, that the highest market cap stocks, to really be pushing the gains in the market. I mean, that's very typical, honestly. And there's a great tweet out here. It says, I know the only a few stocks driving returns narrative sounds scary, but according to empirical research, there really isn't much to read into forward returns when trailing performance has been concentrated in the top of the market. Right. And that's kind of what this chart right here is visualizing and going over for you guys is, when we're seeing these large cap stocks really leading the way and driving a lot of the returns, it really hasn't been some flashing, huge crash signal. Yeah, there could be, a rotation due to some of the sectors that are lagging in the market, but that doesn't mean that everything has to crash. It's very common to see the top stocks performing and leading the market and really carrying the market. That's what happens in these bull markets and in these bullish cycles. Right. And just some more data to kind of reiterate that if you look at the S&P 500, it's averaged a 6.7% gain in 6 months following mega cap outperformance streaks. So again, not really so much doom and gloom here by having the top stocks in the market and the mega caps outperforming the other stocks in the market. All right. That's actually a, pretty bullish sign. And again, showing you guys an average of 6.7% gain in 6 months following the mega cap outperformance streaks. Okay. Now, if we take a look here and just kind of go over, the performance year to date on a lot of these stocks, the best performing stocks right here is going to be NVIDIA. Okay. Then you have Meta, AMD. All right. No surprise there. These stocks are up over 100%. AMD almost up 100% year to date. Really amazing stuff. What really caught me by surprise, and probably a lot of other people, if you didn't even realize, Royal Caribbean, GE, as in General Electric people, and Carnival Cruise Lines, all right, are in the top 10 performing stocks for the year. All right, now that's pretty surprising. And we're seeing when you look at sector wise, we're seeing a lot of it is in consumer cyclicals. Okay, a heavy chunk of these are in consumer cyclicals, and the rest is pretty much in technology, right? So we're actually seeing a big rotation into the consumer cyclicals in things such as Tesla, the cruise lines, and then also in technology, right? That's really where a lot of the gains have been, so far this year, has been mostly those two areas. Now, this is TLT's daily chart. Okay. And please don't get offended on this video. Okay. It seems like sometimes people take things personal when I just go over technical analysis. There's no way to predict the future, guys. All we can do is try to prepare and look at the possible signals that we can, that are in front of us, right? All of this is just purely simply data, and it's a live auction, and we're all of these candlesticks are just telling you the battle between buyers and sellers. And so I mentioned that we did have this structure here. Okay, we had this triangle pattern, and it kept squeezing and squeezing, and we are eventually going to see a move, right? We're either going to get a breakout to the upside or a move to the downside. And I mentioned that we have one gap down to fill. We have two gaps down to fill, right? We have a gap all the way down to 95 on TLT. And if it gets down there, I'm going to be very excited, honestly. Now, I mentioned that, we broke through the structure, and in a perfect world scenario, you would look for a breakdown, retest of the trend line, and then a push lower. And I'm tracking a 5-wave bearish structure here, that would take us down to potentially 96, 97, maybe even fill that gap down at 95. And if it really wanted to overextend on bearishness, it could go down to 92.30. Okay. So those are just some areas where we could potentially go. Now, I did mention that TLT was looking like it was ready to bounce, and the reason being is because we filled a half of this gap, right? If we draw a line right here, right in the center of this gap, you can see that's directly where we ended up bouncing on TLT. And typically a half gap fill is bullish, right? And I've mentioned this in many of my videos. And you can see, TLT actually went bullish after that, right? We came down, we stopped and filled exactly half of that gap, and we saw buyers take control and really get a nice push up on TLT. But ultimately, it appears that that was just for the healthy retrace and healthy retest of the move, and possibly now we're continuing lower, right? I mean, that's what I'm seeing. We broke this bullish divergence trend line that initially caused a big move to the upside. All of these yellow lines right here, or yellow arrows, these are all double tops or double bottoms. And there's lots of different signals and strategies you guys can use. I typically like to focus on the MACD and the RSI in my YouTube videos, as those are some of the more basic and more common. But over here we had a double bottom. We also got a MACD entry signal where the red line crosses up above. We had bullish divergence on the RSI indicated by these circles. We had a low and then a lower low. We had a low and then we actually had a higher low. So that's bullish divergence on the RSI. And then we actually had an abandoned baby chart pattern here. So, I mean, really at this time, it was about 4 buy signals, and we saw a very strong move to the upside. Over here, we put in a double top. We also had a rising wedge pattern. We saw a MACD crossover to the downside. And sure enough, we got a very clean textbook breakdown, retest, and push lower. So you can use technical analysis. I really like the bond market because it's a lot bigger than the stock market. It's much more massive than the stock market. There's a lot of people looking at a lot of these same signals, and a lot of times they can become self-fulfilling prophecies. Now, it's never a guarantee that any one strategy or pattern is going to work, but these are some of the things that have helped me out and brought me success when it comes to trading TLT. Now, if you take a look here, we also did get that bullish crossover here on the MACD recently after we filled half of that gap. We had the strong move up, but we were not able to fill this gap up here. We have 2 more gaps up to fill as well. We'll see if we fill those in the near term, or whether it's going to be a little bit more of a long term. But for now, it does seem we got a 1, 2, 3, 4 and put in a top on our wave 4 and are trying to come down to our wave 5 targets. All right. It'll be really interesting to see. The big question right now is this going to turn into a sell signal where the red line crosses down below the yellow line here on the MACD? We had some questions last time the MACD was ranging, right? And we were looking to see, was it going to turn into a buy signal? Ultimately, it rejected that yellow line and continued heading lower. And that's when we really broke the trend line. We did get that crossover up above, but we're not seeing much follow through. So there is a chance, if we get that crossover to the downside on the MACD, that most likely we're going to see this wave 5 structure fill and complete, and bring TLT down to the 96.65 area. Right. And if we look at the weekly chart as well, the weekly chart doesn't necessarily look great either. Okay. You can see we had a bear pennant forming here in the past. All right. And then we ended up breaking that once we broke through there. Again, very textbook breakdown, retest, push lower. We hit the targets for the bear pennant. Here recently, we just put in another bear pennant and we're breaking below that. Right. Now, if this bear pennant plays out and it wants to play out fully, potentially we could see TLT come down to the $80 area. Now, do I think that that's a high probability? Do I think buyers will try to step in and push things higher, potentially form a double bottom before we reach that area, right? A bottom here, and then we come back up to that range right around here? Yeah, that's very possible, right? We could see some support in the 90s on TLT, but you do just kind of have to mentally prepare for all scenarios, right? And you have to have some type of a strategy in case things are going to go south. That way you can hedge yourself and help minimize your losses. Okay. And so if we see here on the MACD again, on the weekly MACD, we had a sell signal over here. We saw a sharp push down, but then we actually curled back up above. So this right here was more of a false signal here on the MACD. But once we got the real sell signal, that's when we actually broke the bear flag or the bear pennant here and saw that huge move down. And we need to be cautious right here, okay? Because if we get a true sell signal here, which we've already crossed down below, the big question is it going to turn into another fake out and curl back up above as we did over here and give a false signal? Or if this is going to turn into a real sell signal on TLT, it's definitely very possible that we could see it come down to that $80 region. Now, that doesn't mean that you can't be bullish on TLT, right? In fact, at the moment, I am seeing some bullish signals here. Okay, this is our 1 hour time frame. And again, we have bullish divergence right here. So we have a low, okay, and then we have a lower low. So clearly this stock is in a downtrend, okay? But when we look at our RSI, again, this is your relative strength index, we're seeing a low and then a higher low, and we're actually creating bullish divergence below 30 on the RSI, which is oversold conditions. So we're seeing TLT is oversold and also forming a bullish divergence. On my momentum indicator here, this is a buy area that I'm interested in going long on TLT for shorter term trades. Whenever we come down to this negative 1.71 area, and we did hit that today. Now, I did not buy into it as soon as we dropped down here. You can see we continue to drop down lower, but I did go long via options at the very end of the day on TLT, looking for some type of a short-term bounce. And if we do get that short-term bounce, I'll throw some type of a trailing stop loss on and protect the profits that I do have in case those see profits, and kind of just let it ride. Maybe it will continue to go up, or maybe it'll be a dead cat bounce and continue going lower, playing out some of those more bearish structures that we see and the charts, right? Remember, it looks like we're going to get a 5-wave structure all the way down to potentially 96 area, maybe even that 95 gap fill, right? But short term, it does look to me like we could potentially be due for some type of a bounce. Now, TLT has been very volatile in the pre-market here lately, and so we could see something like this where it tried to, bounce pre-market or after hours, and then just to continue going lower. That's very possible. But from a risk to reward standpoint, I'm fine with going in and going long on TLT via some options. Looking to get some type of a short-term bounce. I do have hedges as well to the downside. So if TLT does drop, my call options on TLT will lose money, but I also have a hedge there as well. So, it can make back some of my losses if TLT drops, just in case. Hopefully you guys enjoyed this video. If you did, smash that like button, subscribe to the channel for more, and I'm out.